Now, your money masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien. We appreciate you being out here growling and prowling with us at the TGIF Friday, folks. Let's make it a great one. And, of course, we got a Super Bowl weekend, and, of course, the Patriots are going to rock.
Oh, baby.
Oh, baby.
I love it.
We get the Dow right now up 143, Nasdaq's up 35, S&Ps are up 14. You get gold down 21, silver's off 62, platinum's off 14. You get, let's see, light sweet crude is up 57. Bonds are down 2 points. King dollar. Rejected lows. You know, we had the unemployment number come out, the jobs number come out. Go long America. Back to work. It's out there. You know, there's not one economist that is on record that we're expecting that kind of numbers.
That's how good they are. Is that what you're saying?
Well, you know, I just, you know, I mean, the bottom line is that, and the bottom line, folks, is that if you pay attention to what's around you, it's
right.
there. I learned as a kid, man. Sure. I'm telling you, I learned as a well, it could have been because I was in that little, you know, selling subs and cokes and all this stuff. Do you know what I mean?
Yes, yes.
In general, but I always watched those small stores.
Yeah.
You know, because it was like, okay, man, when it starts, it really starts there. You know.
Yeah.
And of course, you know, we'll see where it goes, but that's a good number.
Yeah. How many? Because I didn't see the reports. If you will, I was just really watching the screens getting set up this morning.
The unemployment rate went down to 8.3, I believe. Okay, jobless rate. Okay. Yeah, 8.3.
Okay.
And you know, that's bottom line is it's saying people and the jobs come in 249,000.
Okay.
People are at 100,000 to 160,000. You know, so
sounds like we need QE3.
Yeah, well, you know, what's amazing is that Bill Gross from PIMCO was right after it saying, no, they're still going to do QE3.
Really?
Yeah.
Markets at their highs.
Yeah.
Creating jobs. Unemployment coming down.
Yeah.
What is he selling?
Well, that's he's selling bonds.
Exactly.
That's the bottom line there. So let's take a look at this, baby. We'll go over to the Dow Industrials first. You take a look at the Dow. Dow's up $153. Putting juice into it is Caterpillar, IBM, United Technologies, Boeing. Well, actually, what it's showing here, if you happen to be looking at the Tiger TV right now, there's not one Dow stock that is in the negative.
Okay.
You know, because if you want to see something that's pretty wild, the laggards, the biggest laggard out there is Johnson & Johnson, which is still putting almost a point into the Dow, and that's pretty bizarre, actually, that Johnson & Johnson could be even called a laggard because it, you know,
right.
You know, between pushing out drugs and when you look at actually, and that pays a 3.5% dividend.
Yeah.
You know, I was listening to this morning. They had one of the executives on from Pepsi, and they were talking about the amount of chips.
Oh,
for
this weekend.
For this weekend.
Oh, baby.
And what you had, folks, is this. So check this out. This is over the top. There's no doubt about it. There's going to be. They gear up. They actually put another 18 million pounds on top of what they normally sell.
Okay, just through distribution, huh?
Right.
That's pretty wild.
Now, all they have to do now, folks, is that after you put someone like that on, now get a drug company on because, you know, you eat all those chips and then they're going to give you some good drugs. Really keep you healthy.
So you know, Super Bowl Sunday, you're a chef.
Yeah.
Chef, you know, great chef.
Yeah.
What do you do?
I don't know what I'm going to do.
What do you cook up for Super Bowl Sunday?
I don't know. I got to think that through. I haven't even thought about it. That's pretty bad.
No. Plenty of time to. No.
Yeah.
Hey, in our business,
it has to be finger food because people are standing up.
Yeah.
Not, you know what I mean?
Right.
You know, really walking around standing up. You know what I mean? Yeah, it'll be some kind of finger food for sure.
Okay.
I had a great, my God, fillet. Not a fillet. What are those big long tenderloins last night, man? It was sick. I actually left the rest of it at home so I could eat it tonight.
Oh, okay. I like it.
Okay, so market-wise, where are we? Let's take a look at this, baby. Okay, so you got the gap up, folks, okay? If we go over, I want to go to Europe first.
Yeah.
Because, you know, the FTSE right now are over the highs.
Yeah.
The DAX, if we take a look at the DAX, that's over the highs. Our own SPY, that little baby, you know, you get 35 million shares now. You know, we know that it hasn't had the volume and it has been going higher. It is right at the July highs right now.
Yes.
And the one that I think you want to keep your eye on, folks, is the small caps. The reason I'm saying that is that right now it's at highs. You know, you get 82.69. That the low of the high out there is 84.94. You know, you got a couple small gaps. Now, the gap up here is kind of interesting, okay, because when we made the high in July.
Yes.
So that high there, the high you're looking at, I'm using the IWM, folks. That high out there is 85.97. The low of that is 84.94. Now, we had gapped up, we had gapped back down. The reason I'm saying the small caps is this. You can see that gold's down 19, silver's off 53.
Yes.
What happens inside that small cap arena is that there's a lot of small caps that are in there. So we'll see whether, in fact, there's any type of sell-off, or this baby goes into next week.
Yeah, right. Yeah, it could be going into the full moon.
And the full
could just be going to the moon. Forget about the full moon.
Oh, it is going to the moon.
Huh?
It is going to the moon.
Jumping over the moon.
It is definitely going to the moon. No, wrong. Hey, thank God I had Poxitani Phil on yesterday.
Yeah, now that was pretty cool.
Maybe I better get him back on today. Oh, man, this is sick. No doubt about it. No doubt about it.
Yeah.
So we got, let's take a look at some of the high volume stocks out here. Let's get the S&P up here. Okay, so you get BAC up 9 cents. You get Qualcomm up $1.16. JDS Uniface is down 95. We got Wells Fargo. That's not moving much. The Gap's up $2. Over at the Dow, let's go to the Big Blue. I'll get that camera up for you. Sorry about that, folks. How did I do that? Okay. There she is.
Yes, there it is.
Okay, so interesting. Okay, so Big Blue. Big Blue's up $2. She's going to go after the highs. She failed last time up there.
Yeah.
That high there is $194.90.
And Caterpillar. Caterpillar is also, you saw that was, I think that was leading the charge on the way up. That's also trying to go after its high as well. I was out there.
Yeah. Okay, so we get with Caterpillar here. So the high on Caterpillar, $1.14, and it's going to need real juice here today.
Yes, it
Interesting,
is.
Man.
Now, the financials are getting ready to complete a Tiger Gartley.
And so check this out. With this,
oh, you pulled up too. Cool. Yeah.
And this is where this goes with the financials. This is going to get really interesting. So technically, you get the Tiger Gartley out there, right?
Yes.
The Tiger Gartley off, let's see.
Going all the way back until the February 11th.
Oh, cool.
February in 2011
I
time
see.
frame. So way up there in the $17 range.
Right. Oh, look at that. Oh, that's pretty.
Yeah.
That's a long-term one. That's nice.
It is.
That's nice.
It is long-term. 618 retracement, 1.272 expansion, and up over October 27th on, so far, just some hot air balloon rides.
Yeah. And now what you're going to see, folks, they had an article today in the Wall Street Journal.
Yeah.
And it was important in the context that the way that the financials have made big money, well, let's put it this way, big money that they're saying they're making big money, is taking the last year and a half out of their reserves. Okay? So, you know, when the financial debacle went all the way down, right?
Yes. I got it. They're recouping some of their accrued.
Exactly.
Okay, they're accrued.
And
they're offsetting.
They're at the end of that deal.
Got it. Okay.
The cookie jar. Okay, the cookie jar, folks, has a few crumbs left in it.
I got it.
Do you ever go into your kitchen? The cookie jar had a few crumbs in it. That was always a bummer, man. I couldn't stand that.
That's true. That's right.
There's no doubt about it, man.
Hey, those are those old general accepted accounting principle tricks, if you will. Right. You know, you always like to have a few drawers that you could pull some things out of, just to offset, you know, whatever bad news or something that you overlooked. Right. Yeah. Well, so that's really all that's what you're talking about. So that's cool.
You know what's funny is that in life, folks. Okay, I guess depending on, you know, we're all the same and all a little bit different.
Yeah.
I remember when I had the store in South Boston, right? What ended up happening is I had two stores going, and then I had this catering business going.
Yeah.
And what I used to do is that, you know, whether it's friends or, you know, community, they'd have bills, you know what I mean? So you get a little thing and you have bills.
Sure.
And what I used to do, and I used to do this on purpose.
Yeah.
Is that when things were going good, right, I knew who was always good for it, right?
Right.
And I'd never go collect.
Yeah.
And I had a couple of my friends call me and says, "Man, you must be really doing good." You know, I said, "Well, you're for my rainy day fund."
I love it. Okay. That's good. So they were building up your drawers.
Yeah,
cool.
And it's really funny how that works, man. Do you know what I mean?
Pretty good.
But I always cracked up. I said to myself, "I wonder why I do that." And I never analyzed, you know, but there's some reason that I did that. There's no doubt about it. Do you know what I mean?
Neat.
Yeah, crazy, man.
Pretty cool.
Okay, so NASDAQ Composite. Let's go over. Let's go first. We'll go NDX. Well, actually, let's go to Apple because Apple dictates the MDX. Right now, we are 458, and it's 458.99. So she's hit 458.84, and you know. Oh, I know what I want to see. One second. NDX. Let's see. I want to just see because last night Wynn came out with numbers.
Yeah, they were trading down this morning.
Okay.
Certainly in the pre-market they were trading down.
Yeah, and that's a leg. And what does happen is this, folks. This is something you better keep your eye on because Wynn is almost. That's not bad. It's only down $5, but meaning just how it's looking. Because what does happen? Wynn right now is $1.15, folks. And what does happen is that the NASDAQ NDX 100 is a modified weighting structure, and that Wynn also has a big part in it.
Yeah.
And it's surprising at times that how much it can basically do a number on the NDX 100. You know, so we'll see where this shakes out. And it will absolutely be hard for the market to sell off today, folks.
Yeah.
The reason being, you're into a Friday. You know, it's been up all week, even though it's been up $1 or $2, but bottom line, it's been up. This is Steve Rhodes, Tom O'Brien. You stay right there, folks. We're coming right back. We have the Dow up 161, NASDAQ up 41, S&P's up 17, gold's down 14, silver's off 46, bonds are down 2 points and 4 ticks. We're right back.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here with us. We get the Dow up 152, NASDAQ up 40, S&P's up 16. And let's go to our man Rick in British Columbia. What's going on, brother?
Hey, man, I'm Doji Man, and I'm proud of it.
Hey, who won the game last night? I meant yesterday to see if we could place a bet for a beer. I still don't know who won. I knew you were going to take Vancouver, and I was going to take the Wings. Who?
Well, when we lose on a shootout, we call it a tie.
Oh, is that it? Oh, baby, I didn't get a chance to see it. Oh,
actually, you know what? Detroit played Vancouver. Detroit totally dominated. And
what was the final score then? What
4-3 overtime. Sorry, shootout.
Yeah, okay. Who put in the winning goal? Was it?
I'm trying to remember.
When they're playing in Vancouver and that game starts at 10 o'clock Eastern Standard Time, there's just no possible way I'm going to be up watching that game.
Right.
Yeah, that must be tough. That must be tough for you guys.
Yeah.
We actually have it pretty good out west because most of the hockey games or sports games, you start at 4:30, and then we get a doubleheader and it starts at 7. And
I know, that's crazy.
And that applies to NFL.
Everything. I know.
NFL, we get it at 1. I mean, we just suck it up, go to bed early after everything's done.
Hey, listen, when I had the office up in Alaska, I used to watch football at 9 o'clock in the morning.
Yeah,
that's right.
Which is cool. I love it.
Hey, I'm going to ask you about the spies, but I think WFC, Wells Fargo, might just really be telling us what's happening here.
And what is that?
I think we're going to test the highs at 31. You put it on a weekly, we got volume up there, and I think we got a little, if we go up again Monday, we're going to have a 3-gap play, and then I put it on a 10-day hourly, and we left that first gap, and we left that on fumes. So I'm not, and I think Wells Fargo can pull back to 27, but I'm just saying I think we're getting close to topping out here. That's all I'm saying.
Yeah.
Now, if you go back to the spies, or I go back to the spies with you, there was a lady that phoned and said, you know what, we got a little inverted head and shoulder formation. I kind of like, yeah, it is there. I haven't, and I think you agree, Tom, we're going up on fumes. You put it on a weekly, I mean, we're going to pull back to 126, but we may just get darn close to those highs on a weekly, on a 1-year weekly first before it happens.
Yeah, that can happen, yeah, no doubt.
Yeah. So, I mean, it looks pretty clean as to where we got to pull back to. It's just, when you put it on a weekly, the spies, I mean, in your experience, Tom, have you seen us go up on such light volume?
Yeah. We did it from August 2010 to May 2011.
Outside of, okay, so let's talk about this for a second, folks, because there's just no doubt. The longest that we ever went up on light volume, okay, was, a year and a half ago, right? No doubt.
Yeah.
It pulls down. The time before that, however, though, was the 2007 when it cracked.
Okay. Okay, yeah.
And what I've found is this: the further you go up with lighter volume, the heavier the downdraft becomes. So we'll see where this shakes out. And of course,
here's the funny thing: we go by volumes, obviously, but the fundamental thing is, all of a sudden, what they thought Greece had a deal yesterday, now it looks like it might not. So gold's getting hammered, and the euro, if you could go over the gold stocks, like I like day trading, and so forth, but. Are we coming down on volume on a daily basis on gold today? I know it looks to me like we are on the contract, but on the gold stock.
Yeah, we'll take a look at it. The basis of the moves in the market in general, meaning volume up, volume down, and then when you turn around and you talk about Greece, the easiest way that I've seen, and I'm not, this is the way that folks that you really should look at bureaucracies and governments, right? They're all full of it. And if you start at that basis, it's really cool because they are.
Right,
I mean,
right.
this is, I'd like to get the statistic underneath it, but I can tell you one thing, okay? They're all full of it. And growing up in Boston, it made it a lot easier because the politicians they are. And that's how you control people. That's how you control whatever you want to control.
Well, speaking of full of it, like obviously with China, you can't believe a thing they're saying. But even with what you in the States do, I forget what it is, but you don't. They give you a number and they say, oh, that's excluding energy and food. Well, we spend over half our money on that.
That's right.
Is that CPI? I forget what I'm talking about.
Yeah,
right?
it's a CPI. That's a CPI.
And then they say excluding food and energy, and I'm like, well, that's 50% of what we spend our money on.
Yeah, absolutely.
Now, but what happens there is that they tell you that. So if you know what the formula is, it's all right.
Yeah.
What ends up happening is that what you don't want to do is take something for you want to understand, okay, what is the formula of the CPI? What is it? And as soon as it was, go good. Okay, excluding food and energy.
Hey, just before I sign off here, AFC wins is good for the market. NFC wins, it's bearish. So I thought I'd mention that. There's a bit of a history to that one.
All righty.
Take care.
You stay right there, folks. Steve Rhodes, Tom O'Brien. We got Michael from Colorado coming up next. The Dow's up 133. Nasdaq's up 38. S&Ps are up 14. We're going to be right back.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley of Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game, risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here with us. We get the Dow up 139, Nasdaq's up 37, S&Ps are up 15. We take a look percentage-wise. You get the FTSE up 1.7%, DAX is up 1.5, and we're running up 1.2 to 1.3.
So this ought to put some conviction in the Asia comeback Sunday morning.
Yeah, it should.
Sunday early.
It should. Well, that's
relatively flat last night.
That's if we hold these numbers.
That's right.
You know?
That's correct, yeah.
Right now, I suspect, okay, so market-wise, this is where 10:34, we got about 45 minutes.
Because of Friday and Super Bowl weekend?
Well, what I've seen happen when you get gap-aways like this is that you get the first gap away.
Yes.
10 o'clock. For some reason, 10 o'clock, man, you always get bang. You get a pop, the second pop, right?
Yeah.
Right around that time frame.
Yeah.
You have the shot of getting a sell-off approximately from about 10:30 to about 20 past 11.
Okay.
And if that doesn't happen, man, the odds on a Friday is that, particularly you've been up all week, is that, no, it'll hold. Now, right now, what we still have, which is just amazing, is that it is still running with the lowest volume all week.
Yeah.
So that's saying quite a bit. That the people are not charging in here. And what's also not happening, or that would have exploded also, is that shots either selling more or not closing.
Yeah, right.
Because that would have went up dramatically.
That's right. Yeah, that would have been that second push.
Oh, no, and the Nasdaq's a little bit different. That's interesting. The Nasdaq is 593 million, which is a big number. The Dow Industrial is only 200 million. So there is divergence there, no doubt. The small caps, if we go into the small caps, you're dealing with 20, which isn't bad. 20 million is not bad. Yeah, 20 million is actually big.
Yeah, I know.
20 million is big.
I know.
Let's go to Michael in Colorado. Hey, Michael, what's going on?
Hey, gentlemen, good morning.
Good morning.
How are you?
I'm doing great, man. You ready for a good weekend?
I'm ready for a good weekend. We got 20 degrees and 19 inches and still coming.
Oh, that's good. That's
cool.
good. That's what you needed. That's great, man.
Yeah, we need it. And I have to say, I'm sorry, I have to root for the Giants, even though I'm Boston.
I'd be sorry, too, if I was rooting for the Giants.
That is cool.
Don't get down on yourself much, Tom, so you wouldn't be sorry about yourself. DVIX. I wonder your take on it, and I also wonder about a move of a move. I've been tracking it for a while, and I am finding can you explain the move of a move and how much under the move it can go?
In the
TVI, the move of a move from last year.
Okay, so the TVIX, folks, is the 2 times VIX exchange traded note. Okay, it trades off basically a short-term VIX S&P 500, which is basically a fear indicator. Let me answer the first question first. Well, first off, a move remove. A move is, this baby started out last year at $16. It goes all the way up to 109, and now it's back down to $14.
The volume's intense.
I'm sorry?
The volume on it is intense. It's super high.
Okay, but now here, it's important to really wrap your head around. This is a vehicle, okay, that hasn't been out there, number one. Okay? So you can't look at comparing this volume this year versus last year.
Uh-huh.
The vehicle only started in 2010.
Yeah.
Yes.
Okay, so you cannot compare that. That's the
Not
first.
enough time. Okay.
Yeah, what you have to do is that when you're doing a comparison, that's why even when the pro shares started, when direction shares started, we actually go to the I shares because they've gone on more. Do you know what I'm saying? To look at those comparisons. Now, what has happened with the pro shares and a couple of the direction shares, they have been out there long enough now that you have something to compare on the other side. This vehicle here itself, I can't stand. I mean, I don't see why people trade it. That's how there's nothing to trade off it. Because the only time you're going to make money in this vehicle is that if you're throwing the dice and you say, okay, I think the market is going to implode in the next 3-4 days. Because and this is a situation understanding what this is. So when that happens, Michael, right?
Yeah.
That does not happen intraday. Okay, it happens overnight. Big moves are happening overnight.
Yeah.
So.
Like it did in July last year.
Yeah. No. Listen. Yeah. When it goes big time. If you walk in and the S&Ps are down 20, yeah, this thing can go to the moon in 2 seconds, man.
So UNG is that a move of a move area, so when is it the same as a swing? If it has more volume and it takes out the move of the move, it's going a lot lower. It's going down.
No. What you want to do, the move of a move is that what you have, folks, is this: is that let's say something goes up 30 points and you're back 30 points. That's a move of a move. Most of the time, you don't see much more than that. It might stall week, 2 weeks, and you're going to get some kind of bounce out of there. That's on the way down. On the way up, what happens is that a move of a move. Let's say it's gone from $70 down to 50, all the way back to 70. You can spike it, but you're going to get a pullback off that baby. And the way what you want to do off there, use one of the Gottliebs or use the butterfly off there. That's what you want to do. And then you match those babies up. When they match up, the volume matches up. Rejection of the swing point, whether it's the high or the low, bang, fire off. Your money manager's in place. You got action.
Cool. I've been noticing the SMH talk about fumes. That's incredibly fumy. Take a look at that. Thanks.
Well, okay, no, I got to get your head wrapped around this. Now, talk to me about the SMH. See, because the SMH, this is what ended up happening here. This is a whole new SMH, so you can't even say it's on fumes because you don't know.
It's a whole new SMH. I guess I missed that.
Okay, so this is what ended up happening. Is that, this blows my mind, actually. The SMHs were always, they must have lost, all I can figure is this, is that whatever fund had the SMH, something happened and they either lost the symbol or they sold it to someone else, and now it's the Market Vectors Trust, and that's the same thing. This is brand new now, okay? Brand new. This thing, the SMH only goes back now to December 21st, which is it's a mind blow. I know, so you can't use the SMH, man.
All right.
Cooking, brother.
Thank you.
Have a great one, man. Have a safe one. So
that is pretty wild.
Let me tell you something. Someone called a couple weeks ago, and I thought I was seeing things.
I remember that. Okay,
yeah,
so I remember
it was
that.
like, hold it. How did the SMH not have any volume?
Yeah.
And, something, whether one fund sold it to another fund or something, but the bottom line is that people don't trade it anymore. You know, and there's a situation where competition comes in the marketplace.
Yeah.
And, you know, they're trading something else other than the SMH.
Yeah.
You know, so.
Oof. That's really good to know.
That's good.
That's really
no. Let's go take a look at the gold contract. So we're on the J contract now. You're doing now. This is a situation that we are coming down on volume. So we've hit. I'll show you just what you're looking at here, folks. And you know, yesterday we hit a high with 142,000 contracts. Well, it's 10:42 Eastern time. We've already done 128,000 contracts. You know, what should hold it up somewhat here is 1716. Right now it's 1738. You know, but this is a classic. If you're looking at a Wyckoff ice, that is a classic, going right up to ice. Can't handle it. The largest downdraft, folks, which did have 451,000 contracts, came from 1760. And that was, of course, when we went from 1760 to 1635 in one day.
Yeah.
One day.
Yes.
And
well, the next day wasn't a lot better. You went all the way down to the 1535.
Right.
So, yeah.
Right. You know. So this, if we go take a look at, let's go take a look at Wrangell Resources. See what she's digging. Yeah, she's not pulling back with much volume. 267,000. That's nothing. Gold Corp. We take a look at Gold Corp. She's not pulling back either. This is going to get interesting.
And so if we go back to the gold contract here. So at this stage, it would appear that what we're doing is really setting up the trading range.
Yes,
the consolidation trading range,
right.
Which is a nice big one because you're going 1770
it's huge.
to 1535.
It's huge.
Area 15.
It's huge.
Yeah.
And what very well could happen.
200-point.
Now, this is where this gets really. I'm digging it right now, particularly because I just brought up those equities.
Yeah.
It looks like it's setting up for a buy.
Yeah.
And if the contract itself, so we're down 19, as the contract starts getting into that 1716, it's going to be hard to break that, man.
Yeah. Okay.
Because that was nice, and the equities themselves are kind of doing that right now. You know, which is really cool because. In fact, you know...
if that's the case, then that sets up really a fairly shallow retracement.
It does.
You know?
No, it does.
I mean,
after that sign of strength coming out the bottom.
That says you're going to go all the way back up to the top.
Yeah.
1914.
Wouldn't that be cool? I know, man.
Yeah.
You know, there's a couple. I like a couple setups out here, and really like them. And, you know, what you could see happen, folks, and this happens a lot, right? That you're going to have divergence. And what the divergence will be is that they will smoke the actual contract.
Okay.
Right? It'll get into that bar. They'll smoke it.
Yeah.
And what happens is that everyone's looking at the contract versus the equities. And the equities are setting up just perfect. And bang, that's the buy. And then, you know. See, gold doesn't have to stay at 1,700 for these companies to make money.
Right.
What has to happen, though, and that hasn't happened yet, energy has to go down.
Okay.
And the correlation in the currencies.
So, you know, to talk about energy, and I just simply was pointing out to folks this morning, just kind of throwing out a little clue there, is when you start taking a look at the weak sector inside the S&P.
Okay.
Underlined, okay? So you got all the sectors are really above the October 27th area.
Yes.
Go take a look at the XLE. Hasn't been able to get up over there.
When is the president going to call you so that you can get this country straightened out?
We get unemployment down to zero.
I want to know when that's going to happen, man.
Oh, God. Can you imagine the ride we'd have in this country?
Yeah, no, totally.
Become energy independent.
Totally.
Truly do it?
Yeah, well, you know, the bottom line is if they can get all those trucks on natural gas, that's going to...
Well, that's a big help, too.
That's 1/3 of the energy we're using.
For sure.
And that's a big start, you know. And imagine, we have more natural gas than anyone in the world.
Yeah.
Anyone in the world.
Oh.
You know, and you know what cracks me up? I still saw ads. I saw an ad yesterday, folks, in one of the trading magazines. This one was from Europe, you know, like one of these commodity magazines.
Yeah.
For peak oil. Peak oil.
Yeah, we haven't heard that since July of 2007.
Give me a break. Peak oil. They're out of their minds. Peak oil.
When oil made that 3 drive to a top.
Yeah.
Right in the 140 range.
There is so much oil, it's insane. You know, you can argue the question is, well, what's it take to get out of the ground? There's no doubt about that. Do you know what I mean?
Yeah.
But what you do have, and I was thinking of this morning, is that think about when you're driving around now, how many gas stations are now around versus 20 years ago. And the oil companies really, they got the monopoly going.
Yeah,
first, they stopped selling to the independents. I'll raise the price so much.
Yeah.
They keep them small, right?
Yeah.
We know we get an oil glut right now. All you have to do is look at the tankers, folks. The tankers,
that's right.
So the oil glut is there, but they won't release. You know, they know that, okay, hold on, we got to keep this as tight, so we got to keep the price up.
Right.
You know? It's wild when you think about it.
Yeah.
I actually went this morning, I bet I went about 10 miles on a major road, and now the gas station wasn't on the right-hand side. I was on the right-hand side. But, you know. But I cracked. That's when I really started thinking. I says, look at this, man. This is a trip. I know. Always thinking about supply and demand. No, seriously.
No, it's good. Well,
you know?
Well, and the supply and demand on the XLE, it's not there. So I mean, it is. It is just struggling.
Well, I better start going look at that Doug.
Yeah,
that Doug was awful good to me. Man.
I know.
In fact, you know what? Oh, this is going to be funny. 1 second, I got to pull this back. I get a feeling that this is actually the same place. I think I wrote it last time from 23 to 44. I did. Oh no. Oh, I see. It's not the same price.
It's not. That's not the same prices because they
doubled but that's what it was.
Right.
See that right in there? Yeah. That's what it was.
Yeah.
That's sick. So that went from 100 to 356. Oh my God.
Yeah.
These things are crazy.
It'd be beautiful if it just could get up towards that top a little bit higher on the XLE. But right, you know, and ExxonMobil took out a swing point I think yesterday or 2 days ago with volume. At one point in time, in the last couple of days, took out the swing point with some volume in it. So
it did, huh?
Yeah.
Oh, on the way down.
On the way down. Yeah. On the way down. Yeah. On the way down.
Oh, I see.
You know. Yeah.
Look at that. Yeah.
So
that's good.
Love it.
Okay, so let's go over the NQs. Well, we'll take a look at the 3 Qs first because they're hanging up there. There's not a seller yet, and on the small caps, there's not a seller yet. I don't think. Let's see. Not yet. What do we got? We got 10:49.
That's a halfway through Basil's show.
No,
you say 11:30?
Yeah, 11:30.
11:30. I love it.
877-927-6648. Give us a call, folks. Steve Rhodes, Tom O'Brien, all you Tigers and Tigresses. Make sure you have a good weekend out there, folks. We'll come right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you know, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider, David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We get the Dow up $1.42. Nasdaq up 40. S&Ps are up 16. Gold's down 15. Silver's off 39. And a lot of these resource stocks, they're coming back in the right way.
Yeah.
You know? So that's that's gonna be pretty wild watching how this is gonna shake out. The bond market. Let's go over and take a look at that bond market. So bonds are down 2 points. You got 323,000 contracts. It's not bad, but you know what? You're going into, look at that, 460. So the consolidation still is.
It is.
That's pretty crazy.
It's consolidating for quite a while,
man.
huh?
It's amazing. It really is. You know, if you do the watch this, folks. What I'll do is I'll put on the continuous contract, and when you bring this up, it's put it on a weekly here. You'll just see how tight it is.
Yeah.
That's pretty tight. And 136. When I do it that way, it's saying 156. What I like doing, when you break, this is pretty cool, folks, okay? This is, now, all of this is you just, when you do a decisive break like this, right, all I do is I take the top to the bottom and add it, and that's 156.
Yeah. Okay.
Now, I think it's interesting, and then you can take the A to the B, and that's 160. I like them when they come together like that. It's like, okay, man, we're going. Seriously, man, can you imagine free money? But what free money actually means, now this is where it's going to get weird. Free money would mean that you're in deflation.
Right.
Not inflation.
Right.
And deflation, folks, would go against my deal, meaning that real estate's coming back, because the biggest deflationary deal out there has been real estate.
Yeah.
So I know that depending, where we are, they're cash flow positive right now, with the right amount of money down. And what I've seen, what I'm really digging, actually, particularly because we're getting our head wrapped around the real estate so much, I've seen more people that have been in real estate and own houses selling their houses and renting. And I'm saying to myself, folks, don't do that. I'm telling you.
Yeah.
That's insane.
Yeah.
Okay, I was just up in Boston, and one of my friends up in Boston, right, he's always, had a really nice house. He just turned around and sold it and rented. I said, what are you doing? He said, oh, no, man. He says, that thing's never going to come back. And in Boston, folks, it already has come back, and he just wanted, he felt, take it now. I says, but for what?
No question, it's a good, I mean, it's a good asset. It's a good asset. It's a good asset.
There's only so much of it. We talk about supply and demand. There's only so much of it. Yeah. Now, I happen to see 3 downdrafts, so I feel like I'm really lucky because on every downdraft, people always say, "Oh, it's never going to come back." Oh, really?
Right.
But my take is, if you do a 5-year to 7-year plan at this point, you're out at 2020.
Yeah.
Well, the peak was 2006. That's 14 years.
Yeah.
Oh, check this out. This is pretty cool. And this has to do, folks, there's no doubt, with generations, when we talk about generations, people coming into the marketplace, and, I've talked about this before with my own children. The oldest demographic out here right now is 52 years old and 21 in the whole country. And you know what, folks? That's a no-brainer. Because the 21, the reason baby boomers can make so much money, is that all they have to be is older than 21. All the folks that are 28 are going to make all the money on the 21-year-olds.
Okay.
Really. And that's what I knew out of the box even when I was young. I said, I just have to be a few years ahead of everyone else. And I was anyway. Do you know what I mean? Demographically I was. But that's like a bull market where you have to be right. There's so many people coming after you. It's like, oh, man, you can make mistakes. Steve Rhodes, Tom O'Brien, you stay right there, folks. We're going up to Newton, Mass. with our man Basil Chapman. We're coming back here. Going to keep you healthy with Nico DeHaan, David White, 3 to 4, and we'll be back at 4 to 6.
That's right. Have a great weekend, folks. See you Monday morning.